What's up, YouTube? So in this video, we're going to be covering daily power of 3 and the range of the daily candle. So looking at this here, you can see price swept the previous day high and then ran towards sell side, also taking out the previous day low. Some of the things you want to look for when you're above the previous day high is entry models to the downside if you're bearish. So as you can see, price is above the previous day high here, and in the 7 to 10:30 a.m. window, New York time, you want to see it trade beneath the previous day high in the order block, and you can go for shorts in that time window because that's when the daily range is likely to unfold. All right, so what that would look like is from midnight to pre-market, which is 7 New York time. That's considered the overnight, and we don't really trade the overnight. We use that as data. And when you have liquidity on both sides of the overnight in terms of a pool, you can expect this type of movement from 7 a.m. to 10:30 a.m. session. You can expect this type of movement where price will manipulate and then run lower after taking a previous day high or a previous day's high. All right, so looking at this example here, you can see from midnight to pre-market. We don't really trade this. We use this as like information. So coming to pre-market, you can see we're beneath the opening price. We take out this liquidity pool here. The 10:30 mark is here. Taking out overnight high, headed to a previous objective. So when price is like bearish like this, it looks like a down close candle, right? So when you're under the opening price, which is this dashed line here, and then it flips bullish like this, essentially this comes back up, flips bullish, and now it's a bullish candle like this. And the whole objective is to try to buy beneath the opening price, getting in at the wick. Eventually running up to hit your key level. All right, so for this example here, you can see there's a gap in the previous day here. And you don't necessarily assume at this moment that price is going to get there or not, because you really don't know. So don't be discouraged if you're at midnight and you want to try to determine buys. That's not a thing. I say just arrive around pre-market, start to look for liquidity in what had already happened. So in this case, the open's here. So we're beneath the opening price, okay? At the pre-market. And we hit a gap. So the next thing we have to look out for would be the 9:30 open. So 9:30 had a manipulation to the downside, taking out sell side, ran higher, had a change in state. Now it puts in a bullish fair value gap. So this is looking like the 2022 model in his mentorship. And then now, yeah, this is the 10:30 mark. It gives you a decent run to the opening price. Eventually taking out the previous day high or a previous day high. Here, So the concept, right, is basically from pre-market to 1030, you want to hunt for the daily candle to start flipping towards the other direction. So if you're bullish, you want to see this type of formation set up. Now, if you're bearish, you're going to expect obviously the opposite. So if you come to your daily chart and you see price is beneath the opening price and you want it to go bullish, you'd want to be a buyer when the bearish candle looks like this. And then you can see it flips bullish and you can ride the daily range to the upside. All right, so this is a bullish example here. You can see there's a previous day high here. You can see price has a manipulation move to the downside and then hits the fair value gaps around the 1030 mark. You can see in the pre-market, they left good liquidity pools here, which is a kind of an indication that price is going to cut through that eventually. So here's a bearish example here. You can see price takes a previous day high, runs to the downside, has a fair value gap, and you can short that for the daily range to eventually run lower.